It's Kevin Wadsworth here from NorthstarBadcharts, along with Patrick Karim, and today's special guest. Welcome back, Gareth Soloway. Good to see you, Gareth.
Hey, good to be here again. Thanks for having me.
Well, we had to, Gareth, because the last time I totally forgot there to publish your video after we did it, and I said, man, it's Kevin's fault.
Yeah, blame
I get
the
to
other
blame
guy.
somebody.
It's always my fault. It's all right. I've got broad shoulders. So we're gonna chat gold, silver, commodities, if you like, the US dollar, anything that pops into our minds. Really, there's no agenda for this, so we'll just see where the conversation takes us. So, where do we want to kick off? Do we want to kick off with that Twitter post that Patrick mentioned just before we started talking there? So, you were sharing a post on Twitter with a chart for the SPX, I believe it was, wasn't it?
Yeah, absolutely. So let's talk about this. This is the biggest thing in the last year and a half that I've seen in the charts. And again, this comes with a trend line that starts all the way back in March of 2020. So you're going all the way back to the COVID panic lows where the markets were collapsing. And you can see the chart again starts out and it's a straight line with the trend line. And notice the chart going away from that line, kind of retracing to it. It doesn't quite get there. Then it pops up again. But look at the height and the distance. Then the height gets less distance. And notice we hit the line here. Same thing, less distance, less height. You hit it twice right here. Then you pierce it by a greater margin. And then what happened up here is very important. So you can see we confirmed, which is 2 closes below, with the second close below the first closes low. And then you retrace to that line, and then the rollover took place. And this is where it was big, where you had a lower low. So if you look back at the chart here, you can see every low was higher. So it was all higher lows, which tells you the trend is up. Well, all of a sudden, we have now shifted to a lower low, which potentially means the trend may have shifted in this market. Now, what I'm watching for here is as we're bouncing, which is no surprise, right? When a market is this strong, it doesn't go right into crash mode. It has lots of buy the dippers that are waiting for that pullback. They're jumping in, they're chasing, thinking the market's going to go to the next all-time high, which it may do. But because you have a lower low now, there's a chance that we could make a lower high. If you make a lower high, you have a definitive confirmed change in trend where you have lower lows and lower highs. And that to me is a game changer for this market in the short term. So again, we have to watch and see how it plays out here, but this could be very big. And we should know within a week or two whether we make new all-time highs or if we start to roll over.
Yeah, of course, and quite a lot of the markets are at critical junctures as well. It's not just the general equities and stock markets. We've got the US dollar trying to break through some significant resistance levels, trying to sort of signal to the market that the US dollar is going higher. We've got gold and silver, of course, as well. They've been suffering quite badly for over a year now in pullback and correction mode, and it's going to be fascinating just to see how this plays out in the medium to longer term with gold and silver. I don't know if you have any views yourself on what you think might be happening with the precious metals at the moment, Gareth.
Yeah, so definitely the precious metals continue to kind of be in not the greatest form right now. One of the things you were just mentioning is so true, that everything with the chart of the S&P to the chart of the yields, the 10-year yields, even Bitcoin, they're all at these really important levels right now. We see that 1.5% on the yield, which we're now approaching at the underside of, as being pivotal to, if we break above that, likely heading to the highs of 1.75% and then to 2%. And the question is, how will that affect gold? And one of the things we know is that when yields generally rise, it's harder on gold, at least in the shorter term, right? So if we look at the charts here, and I'll bring up my chart of gold, the GLD, you can see gold has struggled, even with yields going up and down a little bit recently, gold has struggled. Now, I'm continuing to follow the longer trend on gold, which is a bull flag. So even with all this kind of choppiness here that we've seen ever since we made those highs back in 2020, if you look at this consolidation pattern, right? So we take a line from that high, and we can arguably do the same thing probably from right around here. You know, basically it's in a channel. You have a channel developing, and off of this sharp up move, this is a bullish kind of what you would call a channel developing, where you would expect at some point in the future to break out. And one of the things I keep harping back onto, everyone's always says when yields go up, when the interest rates go up, that gold has to sell off. But if you look at the 1970s to 1980s, it actually wasn't that way, right? We saw the yields, interest rates were at 8%, 10%, 12%, and gold actually had this monumental move to the upside. And that's the kicker, right? So if yields are going up because the economy is strong, people don't feel the need to be in gold. There's no risk, there's no problems, and gold will go down. If yields are going up because of inflation spiking, then you have people rushing into gold. And I think that's the second one, is what we're going to see here over the next year to 2 years, and likely the bull case of why gold could go to 3,000 an ounce and maybe even to 5,000 an ounce.
Wow. Yeah, but you're very right. I think both myself and Patrick have commented in the past the similarities with the 70s and 80s, or at least the reasons in the 70s and up to sort of 1980, even the late 60s, I think, where inflation was sort of building. You can see what happened with the price of gold in an inflationary environment, and that's a very big difference, as you just pointed out there.
That's why it's so impressive what gold did, because in the inflation cycle, it does like in the 70s. And if now we start seeing it react with the rates or interest going up, and it goes up with that, that means it's sniffing out a true inflation cycle or secular inflation cycle. Yeah. But what's impressive for me for gold is when I looked at 2001 to 2011 run, it went up in a disinflation cycle. So there was small inflation within it, within that secular, those interest rates going down since the 1980s all the way down there, and it went up. So it's very impressive that gold now is at a higher low than it was in 2001. And yeah, it's crazy, because if really inflation is we're in a secular inflation cycle, those upwards target for gold, I think we could measure them in the logarithmic moves, instead of classical just linear moves.
Yeah, I agree. And it's interesting, like you said, to look at that period where gold still performed relatively well. And the question is, why did it do that? Was it the emergence of China and India and their demand for gold? What was going on there? But that certainly was an interesting period to see gold even acting well. And again, there's so many people out there that are now saying, oh, well, Bitcoin's taking over and gold is old and no one's going to use it anymore. I disagree. I think there's a place for both Bitcoin and gold. If you look at the explosion in the world population, if you look at the fiat money currency printing, I mean, there's plenty of room for both digital gold and physical gold.
Yeah, completely agree. And of course, we've got the quarterly close coming up next week as well. So we'll be able to start looking at the quarterly charts as well for some bigger picture views. I know myself and Patrick are waiting eagerly to see where the close is in the middle of next week, so we can get some longer term charts out there.
Yeah, for sure.
Yeah. So let's move to Bitcoin then. Let's see. I'm curious to see your outlook, see if it matches with mine. And if it doesn't, then we're going to stop the call right there.
Nice. Awesome. Well, let's take a look right now and see. I'm afraid to bring it up now and talk about it. Just kidding. All right. So Bitcoin, we obviously know China just in the last day or so cracking down even harder on Bitcoin. So we're seeing a little bit of the short-term weakness. But the crazy thing about this is the chart has been telling us this was going to be the price action for a long period of time, right? So you had that head and shoulder pattern right here. And the beauty of head and shoulders, and the only reason they're intriguing to me, is because a head and shoulder pattern that breaks the neckline, which occurred right here when this trend line broke, you can actually measure and calculate the exact target of where that head and shoulder should bottom out. What you do is you take the high pivot of the head and you drop a plumb line straight down to that neckline. That distance, whatever it may be, should be the exact distance when you break the trend line down as well. And in fact, it worked out almost to the penny on Bitcoin to complete the head and shoulders. Now, once a pattern completes, it oftentimes has a bounce. In this case, in general, what we see is markets and stocks tend to go back to what we call the scene of the crime, right? So you had all this chop, consolidation, people were worried, some bulls, but then some bears meeting them. And then finally, you continue to hit this trend line, right? Pivot high, pivot high, pivot high. You pulled back and you finally broke out. And this was the signal that it was going to go back and retrace to that scene of the crime, which is that same trend line neckline that extended all the way out. Notice how as soon as it got there, I mean, this is amazing chart stuff. As soon as it got there, immediately it sold from 53,000 down to basically 43,000, which is an incredible drop in just a one-day period. From that point on, you had consolidation, and then look at where it's gone now. Right back to test the former resistance line here and here. It now is support on Bitcoin, and that's where we're holding. Now, based on everything I'm seeing, you still see further downside. You might chop and maybe float for a little bit here. Eventually 40,000 should give way and you'll start trading inside of this range again. That could last for a couple months. And then I think actually you do break lower, as at some point there's going to be a deleveraging here. And I don't know, again, necessarily, you know, we know the Evergrande situation in China kind of could create a little deleveraging, but it looks like China's trying to block the contagion aspects of it. But at some point, you're going to see these tremors turn into a big quake, and that deleveraging will affect the stock market and Bitcoin and cryptocurrencies. And you should see Bitcoin going down to 18 to 20,000, maybe even a little bit lower. But for certain, I'll be buying at that 20,000-ish range.
Yeah, somewhere near the 200-week moving average, isn't it? I think that 20,000 area, if memory serves me correctly.
So Bitcoin right now, yeah, it's like trapped in between that box. So it's, Jesus. So it's done for you. You think that the highs we're probably swinging into that box, or for you, it's going to be confirmed once we go back in the lower box, then that support will become resistance, and then we have higher chances of grinding downwards, right?
Yeah, so I mean, for me, I just keep on getting stuck on the aspect that this cycle, like everyone's telling me it's different than the last cycles in Bitcoin, right? And maybe it is, but as a trader, I can't assume that until it's proven to me, right? So I have to look at history and say, okay, whenever this occurs, you know, just like what we were talking about with the 70s and 80s in gold, I mean, if that occurred then that should tell us what the future holds if that same scenario comes. And so what you have here, and I'll show my charts on this, is something really fascinating if you go back to previous cycles in Bitcoin. So if you go back to this cycle, right, and this is the 2013 highs. So you had the 2013 run up where it basically went from $100 to $1,250. You then had that big correction down to 500. It then had the huge bounce to 1,100 before rolling off and going back to 100. So I say to myself, okay, look at the recent cycle we've had where you went from, you know, 10,000 to 65,000. You then fell to 30,000, which would be the equivalent of this 500 here. You then bounced to 53,000, which was the 1,100 in that cycle. So if that continues to form, you really should have another big, you know, rollover in Bitcoin. And then you could also say, well, what about the 2017 cycle? Well, in the 2017 cycle, it was almost identical again. You had the big run up from, you know, 3,000 to 20,000. You then had this big flush out to 11,000, which again is almost identical to the 65 to 30,000 flush. Then you had this bounce all the way back to 17,000. We had the bounce to 53,000, and then the move down to 5,000. So, you know, those are the types of things where I just keep on looking at this chart and saying, okay, if it's following that, where here was your high, big flush, then bounce, and then doesn't that tell us, again, if cycles are going to hold and history is going to repeat, that we should go lower? You know, we haven't seen a past cycle where the low has been just 50%-ish or so on a pullback on Bitcoin. So again, it's so hard to know for sure, right? But I just have to go back to the charts and look at the charts and basically go with what they're saying.
It's interesting. I mean, I'm aware of, you know, clearly that scenario, and also, you know, a lot of arguments for gold to move to the upside, stock to flow models and all that kind of stuff. The main thing that I keep looking back at is the Bitcoin dominance chart, which I'm just trying to compare previous behavior with how the crypto cycle ended, how the Bitcoin dominance chart broke down in a meaningful way, and the altcoins had a couple of weeks of going crazy as Bitcoin began its rapid descent. And I can't quite find in the charts that happening just at the moment. Bitcoin dominance chart is still holding up, and I just wonder if, you know, we're going to have a couple of weeks of altcoins doing something similar to what they did last time, going a bit crazy, and, you know, perhaps it's to do with, you know, flows of money out of Bitcoin into alternatives, and then finally out of the crypto sector altogether. Don't know if you have any particular views about, you know, about the dominance and about altcoins.
Yeah, so I think those are some good points that make it slightly different, and it'll be interesting to see how those play out. You know, for me, I just kind of I can't help get away from the side that I look in these altcoins, right? And there's more and more every single day. There's so many cryptocurrencies out there, and it just to me is a reminiscence of the .coms, right? And where you had so many of these crappy .coms, just, you know, you had your business out of your mom and dad's basement, and you you got listed and all of a sudden you were worth $100 million.
Yeah.
At some point, you have to flush a lot of this kind of junk out of the system. And then I do think eventually Bitcoin is 500,000 a coin, and you'll see this, the survivors thrive, just like an Amazon did, just like a Netflix did, and so forth. But yeah, it's just like, I can't grasp my head around how, with so many coins out there, that a lot of them are honestly kind of useless. I mean, maybe someone, obviously there's got to be someone that thinks it's useful, but where does this go? I mean, we can't just keep on having millions and millions of coins created, right?
No, quite right.
So the Bitcoin dominance chart, Kevin, it's like the total market cap of all cryptos. And then when Bitcoin shares shrinks, then that means the altcoins, the crappy coins, whatever you want to call them, they're actually gaining in market value. So the stuff that has less real use, the speculative ones, they're increasing in market cap, which makes it so they're bubbling. It's a bubble essentially, right?
Well, that's right. Yeah, I mean, as you say, the Bitcoin dominance chart is exactly that. It's the percentage of the crypto market by market cap that is made up of Bitcoin. I think it's somewhere between 45 and 50. It's been bouncing around between 45 and 50% or thereabouts. So yeah, and also looking at the ratio charts as well, it's quite interesting to me that the ratio charts all seem to indicate that, you know, the altcoins are set to outperform Bitcoin in quite a big way, but it just doesn't gel with the actual price behavior that you've just shown with Bitcoin, which I agree with. You know, I agree with everything that you just said, and it's just squaring that circle that for me, I just need a little bit more evidence, you know, a breakdown below that level that you showed there. And I think you're quite right. We're heading into trouble.
Yeah, I wonder if as we see these altcoins, you wonder if some of the money that's pumped in, a lot of that's gone into meme stocks. Could that be skipping that altcoin phase because the meme stocks have been? I mean, I don't know. I'm just posing some questions, but it is interesting that we haven't seen that yet, right? The big run in the altcoins.
Yeah. It's a puzzle that I'm sort of trying to work out on a daily basis by looking at the ratio charts, Bitcoin dominance, and you know what it's like. You stare at the screen all day long and you sort of walk away from it thinking,
start dreaming about charts. Yep.
Did I solve anything? But really it's about putting the odds in your favor, isn't it? And charts like the one that you just showed there are all about getting ahead of the odds and being on most occasions being on the winning side of the bet. So it's all evidence gathering. So yeah, Patrick.
Yeah, it's gonna be interesting, and that's what I'm like. So basically, as investors in Bitcoin, we just want to follow that 40 to 41,000 where we're hitting on. And then if you break, you can just use it like a kind of a stepping stone, where if you break 40 to 41, now the low is going to be the 30,000 support. And then if that breaks, it's a stepping stone down to probably 24, maybe 20,000, and kind of just take it day by day. But yeah, I mean, I think at some point we will know for sure if it's going that low.
It's reassuring in a way, because people who've been following myself and on NorthstarBadcharts.com will know that I've identified exactly the same levels. I mean, it's probably using slightly different techniques, using arcs, and all that kind of stuff that people know me for. And it's identified that 40,000 level around about there, give or take 1,000 or so. That's absolutely critical, and also the fact that 30,000 is going to be the next stop if we break down below that. So it's it's nice when other technical analysts sort of confirm these sort of levels, and it's good stuff.
It is for sure.
What I've noticed, like, I like the exercise you did, Gareth, with the looking at the past behavior to see the etymology of like a parabolic melt up. And it repeats over and over. It's like that human emotions, because on the way back up, you think, to the moon again. But no, that's just the echo bubble. It's just the counter reaction. And until after a parabolic melt up, like a severe correction, I don't know, 50, 60, 70%, it's the burden of proof is on the instrument to make a new high, to remove doubt. Because that echo bubble is going to trap a lot of people, and it's going to create even more resistance as it tumbles down. And then it's almost, you need years to recuperate.
And I think you're right about that. And that's why history for us as technical traders is so important, is because you're not just looking at a chart. I mean, someone can say, well, why is that going to repeat over and over again? And the answer is because it's human emotion, right? Charts represent human emotion, and greed and fear never change. So that's why it tends to, that's why at bubble highs, you have the most irrational exuberance and bullishness, is because that's just the nature of it. And once you have everyone in a trade on one direction, there's no more buyers. There's only sellers that can emerge. So you're right about that. It is interesting and it's important to look at the history of charts.
That was awesome. I'm just wondering if Bitcoin had enough time to heal from that drop to challenge, or it just needs maybe more time to consolidate some more to try to recuperate. But yeah, the chart's going to tell us. All we have to do is wait and watch.
Yeah, and one of the things, I mean, I don't use it as an indicator, but I do keep my ear to kind of the Bitcoin crowd out there. And there's still so many people calling for 100,000 by year end and stuff like that. And to me, that's an indicator that we probably won't see it, let alone maybe back to 65,000. And it makes me more bearish, right? I mean, you have these people just crying out for these all-time highs in 100,000, and it's almost never. What I want to see is when Bitcoin's going to start going up, everyone's going to hate on it. Everyone's going to say, "Oh, it's done. You know, no one wants it anymore." And then it's probably the real bottom.
A little bit that people are talking about precious metals at the moment, Gareth.
Yeah, you're 100% right. That's it. That's one. I mean, you obviously as a technical trader never take that alone, but you like to hear people saying, "Oh, gold is over. No one wants gold anymore." That's when the big money is accumulating. They're just sitting there as people sell it, and they're just have their hands out and just accumulating.
And also with the uranium market last year as well, when uranium miners were just about at rock bottom and nobody was interested in the uranium sector. So it's it's the same thing over and over again. Just one other, well, I don't know about one other thing, but something else that I've been looking at this week is the US dollar. I just wondered if you've got any thoughts on the US dollar. I know people listening will probably be interested in that one.
So, I mean, the dollar is actually putting in some bullish consolidation here. In fact, we can take a look at the chart real quick and see. But you can see clearly this is the UUP chart, which is, again, an ETF that tracks the dollar. It's what I have on this platform. But you can clearly see it's kind of what we would refer to as a cup and handle pattern. You have the cup and then this bullish consolidation. And really, you can very easily see that this is the line that the dollar would break to create a little bit of a breakout. And the question is, well, what would cause that, right? Because if you're going to get a breakout in the dollar, like everything I see, longer term dollar is done, right? You're going to see more printing of money, the dollar declining, probably not the reserve currency of the world in 10 or plus years. So all of those are negatives. But here the chart's telling us in the short term, it's a positive. And the only thing I can make sense out of this is that we are probably getting very close, like the S&P chart is telling us, to some sort of panic sell, right? And as soon as we see, I mean, we saw this earlier about a week ago when we saw the market selling heavily, the dollar was surging to the upside because people were running for cover still in the US dollar, just like they do in gold sometimes. So that's what I'm thinking here, is that it's kind of the way the dollar's trading is telling us there's going to be some hardships in the stock market and big money starting to accumulate for that effect.
That's my the evidence is slowly building to that. The VIX creeping up, crescendoing until the valves, they just wake up one morning, Monday morning, and it's minus I don't know how many points. But the US dollar sniffing something out, and the fact that silver wasn't able to break above 28 is a big warning signal. And the gold silver ratio looks practically like the gold chart crescendoing up. For me, those are big warning signs there to take heed.
And I think also people, the investors have gotten accustomed to ignoring things because nothing's mattered to this market. But there are certain things, like potentially the long-term capital gains tax going up. We'll have to get more clarity into year end. But the question is, I mean, let's just say it starts January 1st when those taxes go up. I mean, you could see a massive sell from big money just taking profits into year end if that tax date is the 1st of next year. If they're smart, if the government's smart, they'll do it as retroactive so that people can't crush stocks by selling them to take those profits for those lower tax rates. But I mean, things like that, then you have other factors out there, whether it's China or whether it's the Delta variant, all these type of things are kind of looming. And at some point, the Fed's going to taper too. I mean, I don't think they'll ever finish tapering because I think the market will throw a fit. But the Fed, Jerome Powell on this past Wednesday was pretty clear that he wants to taper. It was interesting. The statement from the Fed was pretty dovish. The market started to push up. And then he came out on his press conference and he was kind of hawkish. And the market started to sell off again. And since then, we've seen the market kind of disregarding it and going higher anyways. But there are a lot of hurdles into year end that'll be interesting to see. And let's not forget, once people spend all their money from COVID from the last year, now all of a sudden you're going to have an economy that the GDP goes back to probably 1% to 2%. Can you quantify, does it make sense to have valuations of stocks at their current levels when you go back to 1% or 2% on GDP? I don't know.
Yeah,
the building blocks.
Yeah.
Everything's fitting together there. So it's good stuff, Gareth, man. I think I hope we helped the viewers there and make some light out of this all the noise there that we see daily there on the.
We just about managed to get through the interview without mentioning Evergrande. I know we sort of mentioned China there, but I know it's obviously bubbling away in the background there, and who knows what the fallout of that is going to be. But yeah, that's a whole different discussion. But yeah, some fantastic stuff there, Gareth, and we really appreciate your time in coming to talk to us. Gareth Soloway from In the Money Stocks there. Yeah, we really appreciate your time.
Thank you so much. And I hope everyone watching, I mean, remember, there's always places to invest. So, you know, you will see negatives on the charts, on the stocks. There's always some areas to invest in. So there's always opportunity. You don't have to worry about and just freak out about things. You just have to look harder for good trading opportunities.
Yeah, I totally agree. And that's the edge of a chart trader. You could look at, because if you can't look elsewhere, it's because you're emotionally attached to your investment, and that's dangerous because you're going to hold it out. You're going to hold through the fire. You're going to hold it. So
as they say, you're going to hodl it, right? HODL. So.
Jesus, that's such a dangerous word. That word.
I know.
All right, Gareth. We're going to put all the links in the description, guys, and go subscribe to Gareth's website and follow him on Twitter, please.
Thank you, guys. Have a great day.
All right. Thanks,
Cheers,
Gareth.
See you next time. Bye-bye.
Take care.